Thank you, Mr. Chairman. Let me join my colleagues in commending you for the incredibly hard work that you have done and perseverance you've had in holding over 50 hearings, along with a ranking member over the last year alone. This is not a passing fancy that this legislation is, that you propose has come to. It's come through a thoughtful, in-depth, and prolonged process. And certainly for your bold leadership in seeking a long overdue, common sense regulatory reform. Now, let me state from the outset, I may have a few issues with the package that you have, but I know what we attempt to do here is strike the right balance. We don't want the pendulum to swing too far that we can, in essence, stifle economic growth. But I do believe very strongly, Mr. Chairman, that we need to have regulatory reform, or we are destined to relive Santayana's lament that those who, in fact, forget the past, and it's not a too distant past, but seems that some are willing to forget it rather quickly, are destined to relive it. And the nation cannot afford for us to relive what we have come through to date. In my view, it's time to corral the Wall Street bulls, some who saw red and ran wild with America's money. Better accountability and reform of the SEC and other regulatory agencies will finally slap a padlock on the gate to protect American families from another stampede of greed and overindulgence that in many ways cost them their jobs and trampled this economy into the ground. Your legislation seeks to prevent that from ever happening again. The creation of a Consumer Financial Protection Agency would protect consumers from hidden fees, abusive terms, deceptive practices. A new independent agency with a board of regulators would be empowered to find abuses in the system before they metastasize, and could require companies that threaten the economy to divest some of their holdings. Tough new rules for transparency and accountability from investment advisors, financial brokers, and credit rating agencies that would protect investors and businesses. Provisions that impose new capital and leverage requirements would prevent large, complex financial conglomerates from bringing the system to its knees. They would require industry to provide its own capital injections, update the Fed's lender of last resort authority, establish rigorous standards and supervision to protect consumers, investors, and businesses. All of these provisions, I believe, send a loud, clear message to struggling families in New Jersey, and for that fact across the country, families who lost their homes, their jobs, their businesses, their health care, and what little investments they might have had, that someone will be watching out for them. It lets them know that someone is looking out for their interests. So, Mr. Chairman, your proposed regulatory reform, I believe, seeks to do exactly that. It will let families in my state and every state know that hopefully there won't be another Bernie Madoff, that it will not take 16 years for regulators to recognize a Ponzi scheme when it often was right in front of them, that they will be effective financial regulators and strong independent inspectors, that average hardworking families will not be taken advantage of again. You know, during this process, so many families I've spoken to in New Jersey tell me the same story. They assumed government regulators were on the job, where they were told by unscrupulous mortgage lenders, congratulations, you qualify for a mortgage. No money down. We'll get you an adjustable rate interest, but you'll never see the adjustment. The property will appreciate. You'll sell it long before the rate goes up. Just sign here. And thousands did, Mr. Chairman. They signed on the dotted line believing it had to be legitimate. And the sad truth is that it was unethical, perhaps, but largely legal and unregulated. Hardworking families with very little financial background were in many cases unwittingly lured into overextending themselves. And I've heard from so many families when their only thought was, isn't it great? We qualify. And they assumed they did, that their credit was good enough if the lenders said it was so. They assumed the government would not have allowed either banks or financial institutions to lend them money if they did not think they could pay it back. They did not know that their mortgages, their loans were being bundled, sold, and resold to hedge funds and international investment firms with no regard for them, their investment, their ability to pay back their loans, or their ability to stay in their homes. Now those families are facing foreclosure. Many are facing bankruptcy. They are struggling in no small part because others were allowed to take bigger and bigger risks with their money, often securitizing their mortgages into large packets, not fully knowing the true credit value of those securities. And to add insult to injury, Mr. Chairman, they see those who bought these mortgages in many cases, those deemed too big to fail, be able to collect millions in bailout money. And they often come up to me and say, you know, when I make a mistake, I've got to pay for my mistakes. And yet, when it seems that these institutions make mistakes because they're too big to fail, I have to also pay for their mistakes. So I think the American people are really too big to fail, and it's time that we give them the protection they need. Now, the business of business may be the bottom line, but I think that the business of government is to both protect people and hardworking families who has nothing more than a level playing field, to ensure a regulatory environment that tells us what's inbound and out of bounds. I believe in a free market, but there is a difference between a free market and a free-for-all market. An essential part of this economic recovery must be the knowledge that we can never let the system run wild over Main Street, that there will be responsibility and accountability in our financial system, and I believe much of your legislation takes significant steps to do just that. I believe it can restore consumer confidence and investor confidence. It strengthens the foundations upon which the economy is built so that we can continue to grow and create jobs. It changes the regulatory culture of benign neglect and the blind eye, wink and nod policies of previous administrations that believed all we need to do is to get government off of our backs and the private sector will take care of all of us. Well, they were right. The private sector, when unregulated and not shown the appropriate boundaries, and having a cop at the beat as a regulator instead of being asleep at the switch, took care of itself at the expense of millions of families across this country. So, Mr. Chairman, it's time for transparency. It's time to increase the enforcement budget at the SEC. It's time to help innocent victims of fraud and Ponzi schemes recoup their losses through a security protection investor corporation or some other means. It's time for accountability and regulations that protect American families while allowing our markets-based economy to run smoothly but not run amok. These are necessary reforms, and I believe they're long overdue. There are some structural and regulatory areas that I have some suggestions as we move forward, Mr. Chairman, as well as some additional investor protections that I'm interested in beyond what your legislation calls for, and I'll be looking forward to working with you to even make this legislation even better. We look forward to working with you and members of the committee to make sure that we don't relive the past because we have learned from it and we deal with it accordingly. Thank you, Mr. Chairman, for your leadership, and we look forward to working with you on this most important policy.